In this video, we're going to talk about something that you likely, if you're anything like me, hate paying, and that is taxes. So who wants to learn more about how to save money on taxes? I wish I had more hands to raise. Hello and welcome to this video. I am your wealth coach, Dr. Brittany Halford, and today in this video, I'm going to teach you a few ways that me and my husband save so much money on taxes as healthcare professionals. So if you are working in the healthcare field, then this is for you. If you're working in an entirely different field, but you're a high income earner, then these same strategies will work for you as well. Now, whenever we think about taxes, one of the things that I hear most often is, oh my gosh, I can't believe how much I have to pay. And that's me every year, even when we have a tax strategist. If you are anything like I used to be, right? You just go throughout the year, earning money, spending money. Then once April hits, you provide all of your documents to your tax accountant and you are hoping and praying that you have a zero balance, meaning that you paid in the exact amount that you were supposed to in federal, state, payroll taxes, and you just hope and pray that you don't have to pay anything more. Or you may be someone who is really excited that you are going to get a refund. I'm sorry. I'm gonna tell you that you should no longer be excited about refunds, because that means that you gave a 0% interest loan to the government. And if you had student loans, they didn't do you the same solid. So why are you giving the government free money? No longer be excited about tax refunds. All right, so now that we've kind of clarified all of that, the first thing that I want you to know when you want to save more money on taxes is to know that just like your housing expense, your grocery expenses, the amount that you pay on clothing and shopping, taxes is an expense that you can also control. It took so many years for me to realize this, that taxes was actually something that I had some control over as long as I started to create a strategy. Now, I'm not promoting this book at all, but it was changing for me and how I conceptualize taxes, and that was the book Tax-Free Wealth by Tom Wheelwright. And in this book, he highlights the 4 quadrants. However, the one that pays the least amount of taxes are business owners. Those entrepreneurs who are able to leverage that tax code to reap all of those deductions. I know you've been wondering how the Warren Buffetts and the Elon Musks and the Donald Trumps of the world can pay fewer taxes than you do, and that is because they are business owners. Now you may be thinking, well, Brittany, you said that these are strategies that I could implement as a healthcare earner, and you're right. So we're just gonna throw that idea of starting a business to the side for a later video for us to discuss, and let me know in the comments if you're interested in discussing how you can start a business as a woman in healthcare. Now, if you're someone like me who's still working a 9-to-5, then there are some strategies that you can also use, so do not lose hope. So after you know that you have some control over your taxes as an expense, and if you have not watched my previous video of like why you should include tax strategy into your financial plan, then I definitely want you to go to that video right there. Now that I've convinced you that tax strategy needs to be part of your financial plan and you're ready to implement the strategy, here's the first thing that you can do. Review your taxes from last year, because in it, there is a lot of information. And I know some of the numbers can be a bit overwhelming, and so you might want to take a look at it and jot down some questions to talk with your tax accountant. Here are some of the questions that I would ask my tax accountant if I were reviewing my taxes from the last year. The first thing that I would ask the tax accountant is, did I get the standard deduction? And most likely, if you did not provide them with receipts and documentation of other items that you've purchased, then you likely got the standard deduction. So the standard deduction for 2024 is $14,600. So if you are married filing jointly, basically you just get double the deduction, which is $29,200. So that is the amount of money that is shielded or protected from taxation. So if you are someone who got the standard deduction, then the next question for your tax accountant is there any possibility for itemization? And how could that benefit me? Another question that you can ask your tax accountant are, what are some of the other opportunities that are available to me? Then you want to take a look at your tax return to understand what were some of those pre-tax contributions that you made into accounts like 401ks, 403bs, 457bs. Now, you may not have to go to your taxes to get that information. You can also look at your end of year pay stub to understand what were the pre-tax contributions that you made in the year prior. But reviewing that tax statement will be very, very important so that you can have a conversation with your tax accountant. If you received a refund, then you want to ask, okay, how do I need to modify my exemptions so that I no longer receive this refund? And that same question, you can ask them moving forward, how can I modify my exemptions or pay additional out of your paycheck every single paycheck in order to not have this large tax burden at the end of the year? Next, I would just ask them, what are some of the other opportunities that I'm not currently taking advantage of that could help me to decrease my tax burden or increase my tax refund? Now, again, I said that you don't want to have a tax refund, but if you've done all of the adjustments with your exemptions and all of those things, if you've maximized some of those pre-tax contributions, then you're just gonna get a refund at the end of the year. Sometimes a refund is a refund and we should just be grateful for it. But if you're a high income earner, you're likely paying in too much, and so therefore it will require some adjustments of your W-4s in order to pay less. Now, after you've reviewed your tax statement, your tax document from the prior year, then I want you to sit and reflect on how your money has been flowing in and out and how it feels for you. That is really important because we know that all money is basically emotional. There is a segment of finance called behavioral finance for a reason, and I really kind of think that all finance is behavioral finance. So figure out how money feels for you. If you have cash flow at the end of the month, then that means that there are opportunities, if you have not been maximizing some of these other strategies, for you to actually really benefit from utilizing those strategies to reduce your taxable income. And if you feel like money is tight, then there might be some other strategies that you need to implement to optimize your taxes. Then what I want you to do is to think about your pre-tax contributions. I mentioned those already, so you should know exactly how much you have put into that pre-tax bucket. Now, if you are a physician, if you are a nurse practitioner or nurse, then you're likely working at a healthcare institution that has some type of 401k or 403b or 457b. Now, if you're a traveling nurse, then maybe you don't have access to these retirement accounts through your employer, but there might be an opportunity if you're being paid as a 1099 to actually open up a solo 401k. The 401ks and 403bs are employer-sponsored retirement accounts, and the 403b are for nonprofit organizations, but essentially it's the same. 457b is another pre-tax account that you can put money into to reduce your tax liability today. However, you don't have to wait until you are 59 and a half like your 401k or 403b to take that money out. So 457bs are kind of like a retirement account, but does not have the age restriction. That's a great way to think about it, okay? So those are opportunities for you to decrease your taxable income this year, today, okay? And if you are not maxing those out and you have cash flow at the end of the month, then you want to understand how can you optimize utilization of those accounts. Next, you want to think about other pre-taxable accounts like your healthcare savings account, like a flexible spending account, whether that's going to be a limited flexible spending account that you can only use for dental and vision, or if you have any dependents, then you can use the dependent flexible spending account FSA to offset some of the expenses that you are paying for daycare. Now, other ways that you can save on taxes as a healthcare provider is, one, kind of looking at your housing situation. So for many of us who have purchased a home, we're paying interest on the mortgage to purchase that home or borrow that home from the bank, as my husband would say. And that mortgage interest, you can get a tax deduction for that mortgage interest. So that is one of the ways, especially if you're not itemizing your taxes, to have a conversation with your tax accountant to incorporate that mortgage interest deduction and figure out if there are other opportunities for you to itemize to get more than the standard deduction. And speaking of itemization, there are expenses that we have to pay as healthcare providers when we go to conferences, when we purchase uniforms, things of that nature that can be included as a work-related expense that can be deducted when you itemize your taxes. So this is a conversation to really have closely with your tax accountant, because when you are creating a plan to reduce your taxable income, it requires really good documentation. I said in the last video that when you put trash in, you just gonna get trash out. So you have to figure out a way to document this to capture all of those expenses so that you can get the tax deduction and reduce your taxable income as a healthcare provider. And I mentioned before that business owners get the largest, like the best tax incentives. And so one of the ways, if you are a healthcare provider, is you can change the way that you're paid. Now, this is going to require a discussion with your boss or with your healthcare institution, but it's definitely feasible, especially if you're someone who is per diem or is a travel nurse. Then you can ask, or maybe this is like just a side gig that you're doing at another facility, you can ask them to pay you as a 1099. And when you're paid as a 1099, effectively you are your own employer. So this affords you more opportunities for you to even open up a solo 401k for that bucket of income. And the thresholds for contribution as an employer versus as an employee are different. So as an employee for 2024, in your 401k, in your 403b, and your 457b, you can max that account out at $23,000 this year in 2024. But the maximum amount that you can put into a 401k or 403b is $69,000. So say, for example, that you are getting paid as a 1099 employee, then you can open up a solo 401k, and then a portion of that net income, 20% of that net income, you can actually pay into that solo 401k on top of what you might have already contributed as an employee. So that means that you have an additional $46,000 that you could potentially put into this account to decrease your taxable income. The other way that we've saved on taxes, and typically this is with someone who owns their own business, but I know that there are group practices that actually have this. So if you're working as a healthcare provider in a group practice, then you can go and say, hey, have you ever thought about using a cash balance plan? A cash balance plan is very similar to a pension in the way that you contribute a defined amount, but all of that contribution from an employer perspective, right, will help you to reduce your taxable income. And if you are a partner of that group practice, then that is going to reduce your taxable income. So I would definitely look into a cash balance plan if you're part of a group practice that you can use, because you can put much more money away in a cash balance plan. Now, I talked a lot about how to save money on taxes, and there are so many other ways that we've done this. Like most recently, we've invested in oil and gas that has helped to reduce our taxable income. And if you want to learn more about that, then just drop a comment below and I will do an entire video on our experience investing in oil and gas. There are so many ways that you can reduce your taxable income today, but just know that some of the strategies that I've suggested to you, you will likely still need to pay taxes on that money when you pull that money out in retirement. And so this is why it's really important that you think about diversification of your tax strategy when you're creating a tax strategy. So I'll talk a little bit more about post-tax contributions and taxable buckets and how to improve your tax efficiency, how to save money on taxes when you pull them up in retirement and as you're investing. So stay tuned to the next upcoming videos, and always remember to subscribe to my channel, share this video with someone you know, and I will see you in the next one. Bye-bye.